what is the value of your estate? Now, very important for inheritance tax purposes, but it can be useful to have an idea throughout your lifetime what your estate is worth. So let's have a look today. Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Calculating your estate can be quite a fun exercise to see where you are in the game of life and how you're getting on with your investments and with the debts that you have accumulated to get those investments. So what do you need to include when you're looking at calculating your estate? Well, the starting point that I'd usually go for is looking at what assets you actually have. Now, this is everything that you have. So this could be your own home, any investment property, any investments, and any other bits and pieces such as jewellery and any other valuables. And the best way to go about doing this is to literally either start a spreadsheet or start writing them down in a book to keep track of what you have accumulated in your lifetime so far. Now, this is the things that have a monetary value on them, as that obviously makes it a lot easier to see what the value of your estate is. So I'd probably start with things closest to home, and that's probably the best one to start with, which is your own home and how much your own home is worth as of today. Obviously, that will change over time. As property prices go up, they go down and they shift around. So you can only put the values that they are as of today. And then obviously, if you do it on some sort of spreadsheet software, you can actually update this as you go along. And if you review this every something like 6 months, you'll be able to see what has changed, what has happened, add anything additional onto this summary. So some ideas of what you may be including on the list. So you've got your own home, you've got your investment properties that you are likely to have. You may have some stocks and shares. You'll have potentially some pensions depending what jobs you may have had in the past. You may have money in bank accounts, savings accounts or ISAs. You may have household items, so you may have some jewellery, you may have some paintings, you may have some antique furniture. There may be all sorts of things, so have a look around you and see what you have in terms of assets around the home. You may have cars, whether it's just your family car or you may be a collector of cars or boats or other such motor vehicles. Do you have any foreign assets, anything overseas, whether that be property or investments in different countries? When you come to do your estate of anyone, you'll also look at things like any money that is owed to them from maybe the job, pensions and things like that. But if we're looking at this during our lifetime, we probably don't need to necessarily worry about those things at this point in time. You may also need to include any joint assets that are owned between you and a spouse or a sibling or a friend as well. And also look at any shares in any companies that you have in your own name as well. The second piece of the puzzle is obviously going to be what debts you owe. So this may be things like any mortgages you have on any properties, any loans you have out there, maybe a student loan or business loans. At the minute, bounce back loans seem to be one of the big things. And anybody that you have any family loans with or any personal loans. So you're kind of looking at the things that are going to reduce the value of your estate because that money will need to be paid out of anything that you have left over. When calculating this sort of thing for your estate, that would also include any final bills up until the point of someone's demise, to include things like household bills and that sort of thing. Now, if you're doing this during your lifetime, you probably don't need to worry about those things because we're just trying to get a general feel for where things are sitting to give us an idea of what things are looking like for an inheritance tax point of view. Now we've talked through what you may be including, let's jump into one I prepared earlier to just show you the sorts of things and how it could look like to give you an idea of how it will all fit together to get that final number so you can see how much is your estate worth. Obviously, for inheritance tax purposes, there is a key number and this is 325,000. So this is my will and inheritance tax planning checklist. Now, as you can see, as we've been discussing, we're going to do a summary of assets and liabilities. So we're going to have a look down all the different things that we've got in our summary today, which, as you can see, covers a whole host of different things. And then we do our calculation at the bottom. So let's just put some examples in today to give you an idea of how it will all fit together. The first one, as we keep mentioning, is our main residence. So for our example today, I'm just going to put in around 300,000 for the amount that is needed. Now, in terms of the liabilities, we can estimate what our mortgage is. So I'm going to put a 150,000 in just to give us some nice round numbers for us to work with. Now, other land and property is where, for us as investors, things get a little more tricky because we probably have a few more properties. Now, you may want to do this as an individual or as a couple. Even if you do it as a couple, you may need to just do it and split it between each of you, as different things may be owned in different persons' names. So one person may be under the threshold, somebody else's may be over the threshold. So I'm going to work on the basis this main residence is completely mine with just a mortgage for myself, which is not strictly true because I am married and I do have a joint mortgage. But let's ignore that fact for today for this example. Now let's have a look at other land and property then and go, let's go with 2 buy-to-lets, which are both 120,000 each. So let's go with 240,000 for our other 2 buy-to-lets that I've got in my own name. Now I've got mortgages on those because most investors do, especially during the growth phase of their journey. So my mortgages are at 75%, so therefore we can work on the basis of 180,000 for the property side of things. Now, furniture, personal belongings, these are things that are in your home. So this could be anything and everything. So let's just put a round figure of 20,000 for this with everything that is in there. There's no loans on anything in our example today, so it's just literally fixtures, fittings and different things in the house that may have some value. This could be jewellery, it could be antique furniture, it could be paintings. There's a whole host of things it may be in your property. The next one is your car, motorcycle, vehicles. So I know some people have vans, some people have cars, and others have a range of different assets for a vehicle type solution. Today I'm just going to have a car and I'm just going to go around 10,000 for the car to keep our numbers hopefully slightly simpler. Now some of us take out life insurance, so you may want to include your life insurance sum if you're going to get any sort of payout. Today we're going to ignore it, but it's just something worth considering. Savings. Now I know you will speak to a lot of property investors and a lot of people probably at this exact moment in time, and money in the bank is not worth as much as it used to be with the high inflation rates. But it is worthwhile having some savings, some may say, as a backup plan and also to help fund different things you're doing. Plus having ISAs, there are different efficient ways of using your ISAs to hopefully put some savings into place. So overall here, we may have something somewhere. So for our example today, we have got 10,000 in our savings as we've not got too much going there. But some people may have 20, 30, 40, 50 or even 100,000. It will depend on what you're doing. Now we've also got shares quoted on the full stock exchange, shares quoted on the AIM, shares in a private limited company where you own more than 5% holding and less than 5% holding. And the reason for splitting these out on my summary is because depending what's happening, there may be different opportunities for different inheritance tax planning opportunities with different share types. Today we're just talking about putting value in our estate and what it's worth, but we can cover on a future video about how different things are taxed under inheritance tax and some of the savings that we may be able to make. So today we're going to have 5,000 in stock quoted ones, 5,000 in some AIM ones. We're going to have none in our less than, like we've got none in our life insurance, but we do have, funnily enough, a private limited company where I own 50% with a partner, which is for our property investment business. So I've got some shares in this company, 50% as I said, and we now own some buy-to-let, some HMOs. We might own any number of different assets within that company. So now the value of that company is important to me to know what sort of value I've got in my estate. Now, a lot of the time for property companies, we're probably going to be looking at the asset value of the properties if the properties were sold, less any equity. There may be other things that come into the valuation of a property company, but that probably will give you at least a basic idea of where things are at. So I'm going to work on the basis we've got £1 million of property in the company, but we do have debts on a lot of that. So actually, when it comes down to all the debts, let's do it 75%. So we've got 750,000 of debts, which now gives me 250,000 equity in the company. And I'm going to make this a bit simpler on myself because I'm actually going to say we've got some private investor loans of 50,000 that we've got in the company. So let's go with the valuation of the company is actually worth 200,000 at this point in time. That's a key point to just note at this point in time that we're looking at these numbers. So I own 50%. So my valuation of the company is now 100,000. So as you can see, that number is likely to change, as many of them will do over time, depending when I actually do this. Now, other things that we've got are things like other investments. If you've got cryptocurrency, if you've got any gold or metals or any other random investments that may be available to you. I'm not going to add anything else in to complicate this any further, but something worth considering. Business trading assets or liabilities. If you are trading as a sole trader, you might have a plumbing business, a plastering business, you might be a hairdresser, whatever it may be, and you're just doing it in your own name. It may be you've got a van or you've got a vehicle or you've got kit that you use for that business. So there may be some sort of value or some loans against that. Today we're not going to include that, but again, something worth thinking about. Business investment assets. Again, things that you may have other investment assets for that business that you're doing. Another one is any agricultural property. I'm not going to go into that today, but again, if you are in a farming family or anything like that, you may have agricultural land, or you may have just decided that that's the strategy that you're using and it may be there being used. A final few things to think about are things like credit card balances, which today in my example, I'm not going to include any because I'm going to work on the basis that they're paid off in full every month. So yes, there will be a balance, but each month it's cleared. So it's not going to impact the net worth at this point in time. If you've got any HPs or other loans that you may have as you're building, growing your property business, this may be something that you do have in there. So let's put nothing at the moment. But in other debts, we're just going to add something because actually we may have some loans to other parties. We might have private investor loans, and let's just put an extra 50,000 in there as a round sum just to add into our example. So now as we get down to the bottom, we're on to box A and box B, which is basically the total of all our numbers above. So let's add them up. So our column A comes to 690,000. and our column B comes to 380. So to get to our net worth, we are literally taking our assets, take off our liabilities to give us 310,000. So in the example today, if all of the above figures were not completely fictitious, the net worth of the example today would be showing in at 310,000. So that gives us the point in time of doing it now. What I would recommend as you move forward with your property adventure and just in general in life, it can be quite useful to have an idea of where you're at with the different things. Obviously, without even realising it in our example today, my figures come out at 310,000, which is obviously great news for me for now, because that's less than 325,000. And that means that we are under the inheritance tax threshold. However, if you say in the next 6 months another buy-to-let was bought or a HMO was bought, which was worth 300,000, and I'd managed to get a mortgage and I'd only actually had to go maybe 60%, I could have a 300,000 asset added in and a 200,000 loan, which would all of a sudden add in another 100,000 into my net assets. So at that point, I would wholeheartedly be in with my example at that point in time. If something was sold, the equity used and maybe the money spent, then that figure could come down. So this is very much going to be a moving target. But if you keep track, it gives you an idea of where you're sitting, potentially a good game plan if you're wanting to get your net worth up to 1 million, 2 million, you can keep track of have you hit that target yet. But then also for inheritance tax purposes, you can see all the different asset classes, see what you've got, and then as you are nearing the end of your life, or maybe not quite nearing the end of the life, as some of this planning needs to be 10, 20 or 30 years before the end of your life, which unfortunately none of us can quite plan. But then you can start looking at what do you do with those assets? Do you pass them to children? Do you sell them? How does it all fit together to minimise the tax involved and achieve the goals that you set out for your wealth and where you wanted that to end up when, unfortunately, you're no longer around, which, sad to say, will happen to all of us, but hopefully in a very long time to come. Hopefully today you've discovered how to calculate how much your estate is worth so that you can have an idea of what you are going to have to deal with as you get towards the end of your life. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.